Hello and welcome to the Weekend Investing Daily Byte. We are shooting this on 17th of July, and another day and another new high on the Nifty. We have been experiencing continuous new highs on the Nifty going forth, and today was no exception. Uh, we are seeing in this chart how Nifty consolidated in the 19300 to 19500 range for about 8 sessions, and on Friday it broke out of that, and today was another leg up in that direction. So what we are seeing is a perfect sort of flagpole formation taking place, and you can see that the pole formation that we had from 18600 levels to this range, the flag, and now we're breaking out. So we may as well have a good 200-300 points more to go. It's possible that we will clip 20,000 or 20,100 in this leg, and then let's see where we go from there. Some consolidation, of course, will come at some point. There is no doubt about that. But so far, the market looks extremely robust, with sectors rotating in due course of time. Like today, if we see the heat map, we saw Reliance move up 2% ahead of the Geo Financial demerger date coming up. We saw in a big way where banking, from both from private as well as public sector side, both segments of the banking going up in unison, pretty much on back of great results. HDFC Bank coming out with better than expected results. Many public sector banks also coming out with better than expected results. Some smaller private banks also moving up very nicely. So banking seems to be leading the path here. And as we have seen many times, whenever banks lead the path, that is a very sure short sort of a move that happens. Also, Wipro, Grasim, Dr. Reddy, some stocks from the rest of Nifty did well, along with Adani Enterprise, Adani Ports, Asian Paints, etc. But most of the stocks which have been running too fast have slowed for a few sessions now, and others have taken lead. So there is a sector rotation of sorts that is happening. You can see here in the sectoral data, IT stocks that had been running today were muted at 0.3%, but public sector bank stocks that were muted earlier went up 2.3%. Private banks also up 1.3%. Pharma, energy, commodities also up between 0.5% and 1%. Only autos, public sector enterprise stocks, and real estate stocks did not do so well today, but pretty much on a 3 monthly basis, all sectors that we track have done quite well on the performance front. Mid caps also doing quite well, opened with a gap up and stayed uh, above the gap, did not close the gap. 36,640 here. Small caps doing extremely well since end of March. Another gap up, 11,048. So there is for sure a very strong sentiment towards newer ground. Of course, there the reality is that yes, we will hit some bottleneck, some consolidation at some point, but you can't, in fear of that, not invest. I mean, that is not the way of long term investing. We have shown several studies in the past, several daily bytes. If you go back and see the database, we've shown several studies where even if you started at the highest point of that particular 3 4 year period, let's say highest point of 2008, highest point of 2020, highest point in 2017-18, even if you started from there and gradually brought your money in over the next 3 4 5 6 years period, that start did not matter. So uh, try not to time the market in case you are new investors. I mean, there is no real point of that. And if you are a large investor and want to do wholesome, a lump sum deposit or investment, then of course you can break it up into over a period of time and in smaller chunks, so as to not try to catch the market by error. But really speaking, I mean, timing this is very, very difficult. Nifty Bank, as I've been pointing out, has been consolidating in the last 7 8 sessions, and uh, you can see here very nicely that it has almost, sort of taken support at the breakout level. So it was in this zone for a month and a half, and then it broke out, and now it has come down and taken support at this breakout level and started to go up again. So this is very, very healthy sign. I think this support 44 for 400, 44 500 becomes a huge support going forward, and that number can be kept in mind. And this is a higher low sort of that we are creating here. So this is a good sign for overall market as such. So we'll talk about HDFC Bank today. So HDFC Bank, let's take a look at this infographic from ET Markets. HDFC Bank, after this merger with HDFC, is now has a market cap of $151 billion, and this is the list of the world's largest banks by market value. And the largest one here being JP Morgan Chase at 438 billion, then Bank of America, then ICBC, Agriculture Bank of China. So we have two from US, two from China, then Wells Fargo, also American, then HSBC, HDFC. So we are actually having a bank which is number 7 in the world in terms of market cap. I think that itself is a huge feather in India's cap, and of course with the HDFC group for sure. HDFC Bank now has higher market cap than Morgan Stanley, Bank of China, Goldman Sachs. These are big names globally, and HDFC Bank is making that mark. So, as more and more Indian companies break into such top leagues, it will, of course, create more and more investment potential towards India by larger global funds for sure. I mean, as more and more exposure is there of Indian companies to investors abroad. This is a last 25 years of chart of HDFC Bank, a very, very consistent performer. Somewhat like, on a calculator, if you can do 20% growth every year, that's how it delivers the results. Amazing performance, there's no doubt about it. Uh, if What I would like to notice here is that there are very few times that HDFC Bank has not broken out of its previous high within couple of years. So, for instance, we had a phenomenal rise from 5 rupees, and these are all adjusted for any corporate action of dividends, bonuses and splits, not dividends. But if you see here from the very beginning, from 5 rupees adjusted, it went to nearly 25 rupees in a matter of a year. So, 5 times gain in a matter of a year, and then it consolidated for almost 3 to 4 years. Then from nearly around 25 rupees, it went to 175 in the next 3 4 years. So another 7x gain. Then it stayed stagnant for 2 years. Then it went from 175 to nearly 250, so another maybe 30% gain, stagnant for a 1 year, then 30% gain, stagnant for a 1 year. So this has been the pattern, that it will gain, then it will stagnate, then it will gain, it will stagnate, so on and so forth. So recently, since 2022, when it hit this previous high, it has not really been able to convincingly cross this figure for the last 2 years now. And given this past history of this bank, and of course the results today, also the results they have announced is 20% growth, and deposits growing very well, credit growing very well. So the size so far has not mattered. In fact, it is adding to their uh, going forward, their ability to grow faster. So what we're seeing from this last 25 years of pattern is that HDFC Bank does not really stick around any stagnation level for too long. And with this merger now, more and more FII investments can happen here. There is more room now for FII investing to come through into HDFC Bank, and there was some I think 13% is the figure that was being quoted as 13% more shares can now be acquired by FIIs in HDFC Bank. So that may cause a huge inflow over the next few months or few quarters of a period. But having said that, it has consolidated near this level of 1700 for a long time, and maybe now it is time. And of course, the news is also in the right frame of reference for that price also to move up. And maybe the price is ready now to make a new high, and we take a closer look at this. Then we have been in the 16-1700 range since 2021 second half, and it is also sort of creating a very rough inverse head and shoulders pattern, which could have a target of about 2100 if we convincingly go across 1700. So this is a good upside potential, and of course it is a leading bank now from an India perspective on the global scale. So this is all I have for today's daily bite. I hope you like the content, and I hope you will keep sending your feedback in the comment section on how you are finding this channel. Do like or subscribe to the channel if you like the content. Do share it with your friends, and let us know your feedback. Thank you. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.